Good afternoon. I'm Dr. Fasasi Kazim Adiola. We'll be looking at reducing balancing method of calculating depreciation. In our previous video, we have defined what depreciation is as a gradual reduction in economic value of non-current asset. And we said according to IAS 16, depreciation is a systematic allocation of depreciable amount of tangible asset over a period of time. We said there are three causes of depreciation. We have physical deterioration, we have obsolescence, and we have price fluctuation. In the previous video, we said there are different methods of calculating depreciation where we measured the straight line method, the reducing balancing method, production unit method, some of the year digit method, revaluation method, and annuity method. In that video, we look at calculation under the straight line method. But today, we'll be looking at the reducing balancing method. Firstly, what is reducing balancing method? Under this method, percentage known as depreciation rate is applied on current value of non-current assets. Under this method, the depreciable amount reduces in every successive year. Now, what we mean is this. Under this method, the amount provided as depreciation on the non-current asset reduces in every successive year. For instance, if 10,000 is provided in year 1, 8,000 will be provided in year 2, 6,000 will be provided in year 3. What we believe is this: as the asset is put into use, the value of the asset is reducing. In that case, the amount of depreciation to be charged and to be set aside should be reducing in every successive unit. The uniqueness of reducing balancing method is that it uses a fixed percentage, or we call it depreciation depreciation rate. We call it depreciation rate. Now, when this depreciation rate is not given, the following formula is used to derive the fixed percentage known as depreciation rate. Now, what are these formula? The formula is 1 minus n into bracket scrap value all over cost times 100 over 1. This is the formula that is applied where the depreciation rate is not given. where n equals to number of useful life, number of useful life. That's what the n there stand for, the number of useful life. Now, having known this, ledgers are to be what? Prepared after determining the depreciation rate. And what are the accounts that will be prepared? Let's look at account that will be prepared under the reducing balancing method. Let's look at the account to be prepared. After determining the amount of depreciation, the account to be prepared are: 1. Asset account, 2. Provision for depreciation account, 3. Profit and loss account, and 4. Statement of financial position. Statement of financial position. These are the accounts to be prepared. In this case, let's look at an illustration on reducing balancing method. Let's look at illustration. Question: Awele PLC bought a machine for 100,000 naira on 1st January 2015. Estimated scrap value amounted to 2,560 at the end of 4 years useful life. Using reducing balancing method, balance method, 1. Calculate depreciation rates. Calculate depreciation rates. That's 1. 2. Prepare machine account. 3. Prepare provision for depreciation account. 4. Prepare profit and loss account. And 5. Prepare statement of financial position. Now, this is an illustration. How do we solve this illustration? Awele PLC bought a machine for 100,000 on 1st January 2015. Estimated scrap value amount to 2,560 At the end of 4 years useful life, using reducing balancing method, calculate the depreciation rate. Reason being this, the depreciation rate is not given in the question. The first thing the student should do is to calculate the depreciation rate. How do we calculate the depreciation rate? Solution. Awele PLC. Now, to calculate the depreciation rate, which is the first thing to do, is to bring the formula 1 minus n square root scrap value all over cost times 100 over 1. With this, the next thing to do is to input the value into this formula. 1 minus, let's look at the number of years. The number of years, the useful life years is 4 years. That's 1 minus 4 into square root. The scrap value is 2,560 over 100,000 times 100 over 1. How do we solve this further? We need calculator. The 1 remains constant to the end of the equation. 1 minus 4, let's say 2,560 divided by 100,000. We have is 0.0256 times 100 over 1. This is where the problem is for most students. What you do next is 1 minus, please, let's pay attention to this. What we are looking for is 4 square root is 0.0256. Now, these are the steps in your calculator. Your step 1, you press 4 on the calculator. That's step 1. Step 2, press shift function in your calculator. After you press shift, look for this function in your calculator. This is it. We have something like this. Sum, we have something like this. Under it, we have something like this. Sum, we have something like this. Under it, we have, when you press this function will comes out. Once it comes out, press 0.0256. Your final answer will give you a 0.4. The first step there is you press 4 on your calculator. After pressing 4, press shift, or in some calculator, they put it as second function. Once you press shift on your calculator or second function, it will bring out, you go to this function here on your calculator. Some calculator have it like this, or some have it like this. When you press this is what will come out. Immediately it come out, press in your step 4, this step 2, this step 3, this step 4. When you press this will come out. Put this figure inside it, 0.0, which is this. Once you press it inside, it will bring you 0.4, meaning the whole of this function is 0.4 times 100 over 1. Once you do that, you are going to have 1 minus 0.4, that's 0.6 times 100 over 1, and our final answer will be 60%, meaning the rate has been given, and the rate is 60%. Having gotten the rate, or let's recap, we have 1 minus n. The n stands for useful life. The useful life is 4 years. That's minus 4 into scrap value. The scrap value of the question is 2,560 all over what? 100,000, which is the cost. Having done that, 1 minus 4, come here, 2,560 divided by 100,000, you have 0.0256. Now the problem is, get the function. What is the answer to 4 square root 0.0256, which is this. The first thing you do on your calculator, step 1, press 4, which is this 4. After you press 4, you are going to the second function, press shift or second function. That's your step 2. When you press shift, that will give you room to press this function as step 3. Once you press this function, this square root will comes out from your calculator. After that, you press 0 point, that's step 4, 0.0256 inside the square root and press equals to. Your equals to should give you 0.4, which is the whole of this. Now, 1 minus 0.4, that's 0.6 times 100, you are going to have 60%. Now, having gotten the rate is one problem solved. The next in the solution is for you to determine depreciation for each year. After this, you now show us what we call workings. This working is for you to determine your depreciation for each year. How do we do that? This is what we will do. Each year, the year the asset was acquired was 2015. We will now say cost. And here we'll come here and put depreciation. Now, this is what we are looking for. In 2015, the first year, how many percent? 60%. Times what's the cost of the asset? 100,000. We'll now say 60% is 0.60 times 100,000 in the first year. We're having 60,000. This is the depreciation of the first year. Second year, 2016, it will also be 60%. And that's the reason why if the rate is not correct or your solution is not correct, times. How do we know what we use to times here? This is what you do, student. You go back to the first year. The cost of the first year is 100,000. Say 100,000 minus 60,000. The second year cost has reduced to 40,000. You also say 60% times 40,000. You are going to have 24,000. What do you observe? The depreciation amount has reduced. That's why we call it reducing balance method. The depreciation amount reduces in every successive year. How do you get for third year, which is 2017? You also put 60% times. You go to the last calculation. What's the cost? 40,000. Say 40,000 minus 24,000. You are going to be having 16,000. In that case, 60% of 16,000, 0.6 times 16,000. You are going to be having 9,600. Now, the final year, because you have to do for 4 years, 1, 2, 3, 4. In 2018, you also say 60%. How do you get the cost? Go to the last calculation, 16,000 minus 96. 16,000 minus 9,600, you have 6,400. You do 60% of it, that's your depreciation. That's 3,840. Now that we can now determine depreciation for first year, depreciation for second year, and depreciation for the fourth year, we will now start our ledger posting. We'll start our ledger posting. The first item we're asked to post is machine account. Machine account. How do we post that? The first year is 2015. We said first 2015, we assume that the machine was acquired by cash. How much is the cost? The cost is 100,000. We come here at the end of 12 months, 31st 12, 2015, that's balance carried down 100,000. We're done with the first year. When you go to the second year, first 2016, balance brought down 100,000. At the end of the second year, 31st 12, 2016, balance carried down 100,000. That's end of second year. We go to the third year, first 2017, balance brought down, the asset is still existing, 100,000. At the end of 12 months, 31st 12, 2017, balance carried down, 100,000. Last year, the fourth year, 2018, balance brought down 100,000. At the end of the fourth year, balance carried down 100,000. That's end of fourth year. Now, having done this, that's requirement 1. That's the number 2. The next account to solve is the main work, which we call provision for depreciation on machine, credit and debit. How do we solve for this? We start on the credit side. On 31st 12, 2015. Why? An asset can only be depreciated after the asset has been used for 12 months. And 12 months means from January to December. We are going to be setting this depreciation aside from profit and loss. In 2015, that's our workings. In 2015, the amount of provision set aside amounted to 16,000 by our workings, 60% of 100,000. And at the end of 2015, we have balance carried down 60,000. Account close 60. For the purpose of setting aside for the following year, we say first 2016, we'll bring it down. Balance brought down 60,000 naira, which is the first year. In the second year, we'll set another depreciation aside after spending 12 months. 31st 12, 2016. That's another 12 months. We are setting another depreciation aside from our profit and loss. How much is that? That's the second depreciation, 24,000. At the end of 2016, which is 31st 12, 2016, we have total amount that have been set aside is 84,000. Now, what do we mean by that? Let's explain that. In 2016, there's what we call current charge. Current charge in 2016 means the amount of depreciation we set aside in 2016. That is the 24,000. But the balance carried down means total depreciation to date. Total depreciation that we have set aside to what? To date. In accounting, we call it accumulated depreciation. Accumulated depreciation. That is 2015, 60,000. 2016, 24,000. Meaning our total accumulated depreciation to date is 84,000. That's why there's difference between current charge and accumulated depreciation. Accumulated depreciation means total depreciation to date, and that's 84,000. Addition of first year and what? Second year. Let's look at it. Taking it to 2017. Let's go to 2017. In 2017, we bring 2016 to 2017. First, 2017. We have balance brought down. That's 84,000. Now in 2017, there will be current charge also. The current charge of 2017 by our workings is 9,600. That is at the end of 2017, 31st 12, 2017, we have a profit and loss. That's 9,600. We are going to add it again. 84,000 plus 9,600. That's 93,000 at the end of 2017. That's our balance carried down. That's 93,600. This is the accumulated depreciation to date in 2017. What do? We close the account. That's 93,600. 93,000. Now, going to the last year, this is the first, the second. If you observe, what we are setting aside for depreciation, what we are providing is reducing. First year is 60, second year is 24, third year is 9,006. Now to the final year, which is first 2018, we have balance brought down first from the previous year to the current year. That's 93,600. Now at the end of 2018, which is the 12th year, we are going to set aside again from our profit and loss. How much this time? 3,840 plus 3,840. We have set aside a total sum of 3112 2018. We have set aside a total sum of 97,440. 400 and what? 40. That's the end. 440. 97,440. Now, what this means is this. For the total of 4 years, Aweli PLC have set aside a total sum of 97,440. If added to the scrap value plus 2,560, we will be having 100,000 back. In that case, the next account for us to prepare, is our profit and loss and our balance sheet extracts. Our profit and loss and our balance sheet extracts. That's the next account for us to prepare. Profit and loss and balance sheet extract. Now, preparing profit and loss account, we are going to prepare that from our provision for depreciation. This is requirement 2, requirement 3. Now, I want to look at requirement 4. Requirement 4 says we should prepare profit and loss account. How do we do that? If you look at it, there's profit and loss here on credit side. Take it to debit side. That's 31st 12 2015. That's provision for depreciation. How much? 60,000. That's all. For the second year, is 24,000. 31st, that's corresponding entry, 2016. Provision for depreciation, that's corresponding entry. For the third year, we are bringing it from here, it's 9,600. That's 31st 12 2017. Provision for depreciation, that's 9,600. That's what they set aside. And for the last year, 31st 12 2018, provision for depreciation is 3,800 and what? 40. What do you observe? You discover that for every year, the amount of provision for depreciation set aside for this machine was 60,000 in 2015, 24,000 in 2016, it has reduced, 9,600 in 2017, it has reduced, and 3,840. Now, the last solution is statement of financial position extract. We have cost, we have depreciation. NBV means net book value, the current value of the asset. Let's pick it from the first year, 2015. We have what? Machine. The cost of the machine is 100,000. First year depreciation is 60,000. We minus, bracket means minus, 100 minus 60, we have 40,000. That's in 2015. In 2016 financial year, we have machine, historical cost. The historical cost still remain 100,000. What's the accumulated depreciation? See, we are marking 84,000. Now let's minus 100,000 minus 84,000. We have 16,000. In 2017, we have machine, historical cost 100,000. The accumulated depreciation 93,600. Less 93,600 is going to give us 6,400. That's the value remaining in 2017. In the fourth year, 2018, the machine cost 100,000 and the accumulated depreciation to date is 97,440. If we minus 100,000 minus 97,440, we're going to be having the scrap value, which is 2,560. We have come to end of this question, and I'll give you a very short question here for students to try. It's a short question. Amanda PLC bought motor van for 8,000 naira on 1st January 2019. Scrap value 500 at the end of 4 years. At the end of 4 years, using reducing balance, method, prepare all necessary accounts. Amanda PLC bought motor van for 8,000 on 1st January 2019. Scrap value 500 naira at the end of 4 years using reducing what? Balance method. Prepare all necessary accounts. We have come to end of our depreciation account. Our next video will be on disposal of non-current assets. Thank you.